Hi guys, this is Dan with Index Option Trading. Instead of the charts, today the presentation begins with a Google search of financial reform bill. As you can see, is sprinkled with headlines that Senator Reid is seeking a vote on the final bill of Wall Street overhaul. And this has been the news all day. Even CNBC carried this news for a minute or two. Just one sentence on it, not much. They didn't cover it wholly, but I'm going to cover this in detail and show you what is going on here. Let's look at the Republicans first. Read, a number of Republicans have told me they will support the Wall Street reform. This is dated May 18, 3:26 p.m., which is after the market close or just about the market close. And this is what Harry Reid is doing. He is pushing Wall Street reform in the Senate. The news are out everywhere. There are an army of lobbyists who have been sent to Washington and have failed to convince the Senate not to bring the reform because the Obama administration is pushing this reform very strongly and it is going through. Most likely the GOP is also supporting it, but they are blocking these things here and there, as you can see in the next one. GOP blocks three key anti-Wall Street amendments dated 5:18, 4:51 p.m. after the market closed. Senate Republicans blocked Democrats from voting three amendments Tuesday that are strongly opposed. So this battle is raging inside the Senate chambers, and these news and these lobbyists and those people who were sent to block this are failing miserably in the Senate, and most likely this is going to go through. So as a result, when we're having these kind of events, what kind of a toll it can take on market. You would be told, oh, it was the debt in Greece. Oh, wonderful. They have been thrown $1 trillion bone already by the European community. Now it has become a question of euro versus dollars. And if I show you the charts of euro versus dollar, which is completely a waste of time, but it has been in a free fall since whatever time. Euro versus dollar has been in a steep decline from 1202 to 09. This is nothing new. Both these moving averages have been tumbling down like a tumbling dice, and they haven't stopped going there. And the free fall began here in late mid-April again, and it hasn't stopped. So this is hardly a new news that if this is dropping, the stock market should be dropping, because that is not the case. What is really happening here, what we have discussed here previous to this segment of the video, that there is a inevitable vote in the Senate coming up for Senate to vote against the Wall Street reform, and the lobbyists have almost nearly failed at that. So let's see what it is doing to the charts here. We're going to bring this up here to year-to-date chart and SPX, and let's take a look. What a horrific candle here it is. This thing started happening right here. Crash, mini crash, stabilization, one day sharp rally off the lows, hit that deck here again, 50-day moving average, and tumble down, and a doji close, hanging man, and then again renewed amount of vigorous amount of selling today. And this was just as if it's 2008. I haven't seen this amount of selling since 2008. I have been through that horrific recession known as 2008. That was the great recession that we already had, and this is the kind of selling that takes place today. The earnings from Walmart came. They were stellar earnings. The earnings from General Motors are also up. Remember, a company that was in bankruptcy is now making profits. Home Depot, another retailer, stellar earnings. And the stocks on Home Depot, just take a look at it, what it did. They trashed the stock on Home Depot, pushed it below the 50-day moving average. Lowe's, another great second number two retailer, the stock was punished relentlessly below the 50-day, 20-day moving average, 50-day, 20-day, and it's about to hit 23, which is here. These are the earnings. That symbol is earnings. So all these stocks have been pushed and trashed despite great earnings they are giving out. And exactly why is this going on is because Wall Street's news is getting tightened, and they're just going to be seeing a biggest overhaul of financial industry since 1930s. That does not affect the consumers. It helps the consumers. You can read a lot about on our website. Go there. There are a lot of articles there to read about Wall Street reform. Why is it important? What is really exactly happening? And what is President Obama and the administration is doing? But meanwhile, these charts are as dangerous looking and ugly looking they can be. And I do not think that there's any point in going into the market unless you can short. And if there are rallies, sell into the strength. I would be looking forward to unwind some of the positions into the strength as soon as rally is hard here, because when it is pushed down so badly, there are a number of technical reasons the market rallies sharply, and that is the time when you nearly capture that and sell out your position. No point going in there. You're going to get chopped, and I would be chopped. Anybody would be taken to the cleaners. So that is all for today. Wait what the financial report goes through, and if it does, just hold on to your seat.